Hey everybody, welcome back to another week of 3 Question Thursdays. This is where I cover questions from my NRI audience. We have some excellent questions today about NRO NRE transfers, some short term investment options, and things like that. Before we dive in, a quick reminder for everyone to join my NRI only WhatsApp community where I post regular updates about my YouTube channel and I could answer any questions that you have in the same community also. So let's get started with our 3 questions for today. The first question is, I just sold my ancestral property in my hometown and received the proceeds in my NRO account. Can I transfer the sale proceeds from NRO to NRE? I think this is a question I get frequently asked from NRIs who have sold their properties in India. The good news is yes, you can transfer the sale proceeds from your NRO account to NRE account, but there are several important conditions you need to be aware of. See, the RBI allows transfers up to $1 million only per financial year from NRO to NRE. Secondly, this is crucial, you must ensure that applicable taxes on the funds in your NRO account have been paid before transferring them to your NRE account. So for property sales, this would include your capital gain taxes and any other applicable taxes. And the third thing to note here is that you will need to provide documentary evidence for the source of the funds. Now this includes proof of your property sale, original acquisition documents, and inheritance documents also if this is an ancestral property. Additionally, you will need to submit something called as Form 15CA and Form 15CB, which can be obtained with the help of a chartered accountant. Form 15CA is a declaration that you have paid applicable taxes, while Form 15CB is a certificate that chartered accountant gives you verifying the nature of the payment and tax compliance. Your bank will also guide you through this process, but I always recommend that you consult a tax professional who specializes in NRI taxation to ensure that you are fully compliant with all the regulations. So we have question number 2, which is, I have my wedding in 7 months. I have accumulated corpus required for it, but I don't want to keep it in my bank account. Please suggest specific mutual fund scheme suitable for short-term investments. So congratulations on your upcoming wedding. This is a great question about short-term investment options, especially since you have a very specific timeline of 7 months. For such a short-term horizon where you want capital protection, which is more important than the returns that you're looking for with the investment, I would recommend looking at these specific funds. First is which is called as liquid fund. These are excellent options. These have high liquidity. These are investing your money into government treasury bills and very short maturities, which are typically up to 91 days. They offer better returns than savings account with minimal risk and high liquidity. You can also look at ultra short-term funds, which are funds in the debt category, which are suitable for any debt securities who have a duration of 3 to 6 months. These funds offer significantly higher returns as compared to liquid funds while maintaining a very low volatility. And then you again have a third category which is similar to the first two categories, which is called as money market funds. So these are again funds investing into commercial papers, CDs, which have a maturity of less than 1 year. For your specific 7-month timeline, I would recommend that you allocate 70 to 80% of your corpus into liquid funds to immediately start with and have access and stability. Perhaps you can invest 20 to 30% of the remaining fund into money market or ultra short-term funds. However, I would avoid short-term debt funds and short-term bond funds for your situation, as they are typically higher susceptible to interest rate risk, and currently seeing what the RBI is doing, I would not recommend you to go into short-term debt funds. Remember, these are conservative options and the returns are slightly lesser than what you normally expect, but your primary focus here should be capital protection rather than maximizing the returns, given that the money is for a specific purpose and a specific timeline. We have question number 3, which is, when transferring money from NRO to NRE, how much tax will be applicable on transfer amount? I am not talking about TDS. This is an important clarification to make. When transferring money from your NRO account to NRE account, there isn't a separate tax that applies specifically to the transfer itself. The key thing to understand is that tax obligations relate usually to how the money in your NRO account was earned and whether those taxes were paid appropriately before the transfer or not. For example, let's say if the funds in your NRO account came from a rental income, salary earned in India, or capital gains from a property sale, those funds would have already been subject to taxation in India according to the applicable tax rates for those incomes. The transfer itself from NRO to NRE doesn't create a new tax liability. However, you must certify that all the applicable taxes have been paid on the funds before transferring them from NRO to NRE. And this is what I discussed in the first question itself. You might require a Form 15CA and CB to take care of this situation. So I hope my answers were helpful, and that wraps up our 3 question Thursdays for this week. If you find this video helpful, please hit the like button and subscribe button for more NRI focused financial content. And as always, remember that while I provide general guidance, it's important to consult your financial advisor before making any decision. I'll see you in the next video. Thank you.